All right, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 5th already. Great to be, guys. Great to be in the room with everyone. Eman, Jay, Peter, great to see you guys. So we're finally getting the move we've been waiting for. It seems like it's been forever. Markets are going to take their bloody time with this, but we saw a nice turn in the dollar. Really gathering pace yesterday. So we're going to put into focus euro, sterling, still think that could crawl a little higher. Aussie, just resistance just a bit higher. Dollar CAD support just a bit lower. Dollar yen not quite as clear to me still. No surprise there. We'll take a look at dollar Swiss, which is what you're looking at the screen here. I was scoping that out right before the open, and gold and SPX. So Pete, I have just a quick note because I sent you those levels earlier. A quick look. I have the open on the daily chart at 1270. On the intraday chart comes in at 2970. On the intraday chart comes in at 2978. So keep both of those levels in mind as we crawl higher there. All right, so first things first. As always, questions, trade setups, guys, feel free to throw them on the message board. Where are we? All right. So first things first, DXY. Look at this thing. So the weekly chart has been super clean. We've been talking about this. It's been very precarious every time we approach this slope series. Again, it's the same 2011 slope, still paying dividends like 9 years later, 8 years later. It's ridiculous. Again, we don't know that this is the start. You can hear the excitement in my voice just because we have a lot of things in the works, but it's exactly where it needed to turn. I mean, it's the 99.43 level is what we were looking as the next level of weekly resistance. The high came in at 99.37. Can't get much closer than that. Here's what the DXY looked like earlier in the week. Previous to this, just to show you the weekly charts and how we've been looking at this same zone. Slope that we added was the high that we made last year in those lows. So it's the same parallel, and it was just worked out so well. So as we move forward, here's what the intraday chart looked like last night, or 2 nights ago, excuse me. This is on the 3rd. We were coming into that topside resistance on this parallel early in the week. You saw a big old reversal take us right back basically towards the September open, the weekly open. That was really our sort of line in the sand. So once it started breaking through that, you're looking for a break of last Friday's low. That was 98.41. Once you break through that, you're looking for a tag of the lower parallel. And we're trading just above that now. It's ahead of schedule, but this is what we're looking at. First of all, the daily chart. Not quite as clean as far as slope on where we turned on the daily structure, but it was a nice old reversal candle, took us right back below the monthly open, the weekly open, and that in and of itself is a short-term break signal. So the fact that we're getting this deep, I just want to highlight this basic slope. Former trendline resistance, only a 2-point touch, but the break did fuel acceleration. And here's the way down. A lot of times these pivots will just be there, kind of a thorn in your side for a couple of days before anything moves. So just to put a note of caution on where we just kind of grounded out from the daily chart. Here's the intraday. So the actual level that we had on mind was 98.12. Again, we turned just ahead of that just now. The low registered at 98.14. Again, nothing really changes. If we get a little bit of a bounce here, 98.41, looking for resistance, bearish invalidation now drops to 98.69. As long as we stay below there, you're kind of looking for a more pronounced break of near-term uptrend support. So, you know, it's tough to jump into anything fresh if you're not already in it. If you're looking for new positioning, I would say look for a little bit of a drawdown closer down towards slope support. A couple of interesting things to look at would be a basic retracement. And I hate using that low, but I just want to use this as an example. I'm not really a big fan of using those gap lows and the like, but just to look at that, the 618 comes in at 97.93, just below the 98 handle. If we take a more conservative view on that retracement, use it from the low that we just made to the last couple of days of August, it chokes it up to 98. So whichever one you want to use, I'm more inclined to use the low from early August. That puts you somewhere around 98 as well. Basically the same low that you're looking at there. But you get the picture, right? Little bit lower. If you get an exhaustion point, you get a nice little bounce. Might be an opportunity to fade a little bit of this decline. Ultimately, we're looking for confirmation that this turn is a more significant high being registered. So I don't want to see any price action intraday or not above 98.69. Questions on DXY? Near term, nice break, nice reversal, nice turn lower. Longer term, we still need the confirmation that this is something else bigger. This could just fake out everyone again and start ripping. So we kind of need to play our cards close to the chest here. Okay, that's number one. Also, oh my goodness, where's my head? Don't forget, we do get non-farm payrolls on tap this Friday. We also get, the CAD employment figures, and we'll be looking at dollar CAD later. So that double whammy jobs Friday always, or not always, but can oftentimes be a nice little play on price. So keep that in mind. We're looking for a print of 160,000 and unemployment to hold 3.7. Look, the big, I'm not sure if this is going to show up in this report. There was something about this morning I was reading where there's some sort of reformulation of the jobs numbers that's going to shave off basically 500,000 jobs from the broader employment picture as it stands right now in the books. So I don't know if that filters into this report. I don't know if that comes out with Fed rhetoric later today. You got a lot of Fed speakers. Just keep that in mind. End of story. The employment picture looks essentially that we've been at full employment, and the entire focus for the Fed has been on the inflationary picture. And that's sort of their justification for slowing down now. That's all I've got to say on that. Hey, Jaya, good morning to you as well, sir. Okay, so that's DXY. Let's jump into the good stuff. Here's number 2, euro. So again, on the weekly charts, like you can't make this stuff up. I was expecting even maybe a little bit deeper, but this is the same weekly chart we've been working with for quite some time. Here's what the weekly chart looked like in the last update for euro. I mean, we basically just grazed it. Basic slope resistance off the highs from 2018. Tagged again here, broke, saw the accelerated rally. We even almost tested it again as support, and this was the second one. If you zoom out even further, you have that longer term slope. And the parallel there caught the lows. It's ridiculous. Note that momentum essentially held 40. I mean, you gotta print at 39, but you can see that the momentum oscillator on the weekly standpoint just couldn't get any traction. Again, it's too early for us to start raising our hands in victory and saying this is a reversal of any sorts, but initial move looks decent. We're looking for a little bit of a bounce here. So point is, weekly chart looked pretty clean. Here's what the weekly chart looked like last night. So turned right ahead of downslope support. So you're not looking for anything big unless you break what? The weekly open. Converged on the median line here. I was kind of looking at the longer term slope here to give myself some room, but obviously the market was working pretty quick yesterday. Here's the breach. Last night we were heading into a basic 236 retracement. You don't see me put that as a target very often, just because they tend, for me, I've seen, negligible. It's always, if there's resistance just a bit higher, that's what I want to focus on. So that was 1050, 1040, 1041. Don't blame me if you took anything off there. And here's the extended move into the secondary target at 11066. This has been a decent pivot, okay? And it's downslope resistant. So if this slope has any merits, you might see some kickback here. That being said, if it pops higher, the target is clear. 111.12 is what I'd be looking at. It's the 38.2 of the drop. That converges on the longer term slope. So this is what it looks like kind of zoomed out. Very objective stuff. It's the June high, low, high. You've already seen a couple of tests there. Ran into it late last month. It's a basic 38 too. That'd be a really nice spot, um, to look for the next sort of major reaction in price. So as it stands right now, heading to the U.S. Open, look out for some exhaustion here. You're in overbought condition. If you're holding longs, maybe just choke up your stops, bring them up to at least break even or better. At this point, it wouldn't sink below break even, but um, maybe even 1040. If you get a bounce off that level, maybe it pivots off that 236. You have this low from back here, even 1027, right? Maybe you get a drop towards that level. But the breach above 1066 should be accelerated if it's legit. And your next target is going to be 111.12 to the upside. So I like where this is at. Again, if you're not already in it, this is where you kind of want to look for the jump back to reset. I wouldn't really want to get too fancy if you're going to try to play a reversal here, even if it gives us a decent signal, because it's breakout and the markets are really heavily sided on this, on most of these trades. You can just see it, and how everything's kind of just been a one-way drifter. If you get that cascade effect, this could have a little bit more legs, so just watch out. And with the same respect, guys, if we break below the weekly open on any of these trades, whether it's Euro, Sterling, Aussie, even DXY, that's where you want to just take a step back, and if that's invalidation points, because the move here, kind of the onus is on them to prove the move is legit. So keep that in mind. Keep that in mind. Questions on Euro? Here's the 30-minute chart looks like. And this I was looking at this morning, this 10-minute chart. Kind of made an outside reversal here, pull back. I mean, don't want to ever get too granular like this, but you see the picture, maybe another stab into the open, and then it might fail. I would be inclined to put a trailing stop on a breakout like this. So if you do get that run higher, you kind of climb it as close to 111.12 as you can get. But if it's going to give us a pullback, this would be the spot, in short term, like intraday. So just my opinion, talking out loud. Let's move on. Sterling, number 3, another one I think that's caught a lot of people offside. But it jackknife lower. I want to show you the previous update for Sterling real quick, because this one played out radical. This was the downslope that we were following early in the week. And what ended up happening is that it broke downslope support here, crashed lower, and then quickly jackknife and reverse right through it. I removed it because it looked way too complicated. And this is kind of the slope that we presented last night. But the point being is that's the kind of washouts that you want to see. Takes out, gets a new low. This is your post-Brexit low in sterling at 119.50. The low registered just off like 119.50 and change, 119.58, and then the reversal, right? So looking at this last night, we'd already made a big bounce. There was that trend line resistance. This is just extending off the highs that we made in May. We were breaking through it last night. That's what it looked like. Want to stay constructive above the median line. Top side break, you're looking for 129.29. Excuse me, 122.93 and 123.80, right? Here it is. I still think it clips 123.80 at some point. Stops now above this trend line, just below this pivot, maybe 22.40 and change, and you look for the extended push toward 23.80. Now watch out up there, because it's a nice swing low. It was support for a few hours on this 2-hour chart before the break, and it converges on slope. So good time to trim a little off, bring your stops up. If you're looking for new positioning, if you don't have anything on the table, one option would be, if we stretch higher into this zone, look for near-term exhaustion. Really nimble, like quarter leverage. On the pullback, though, we want to start to see support ideally 22, ideally 23, but this is kind of ideally where you want to see support. Again, it's a 236, but it's also some of these major swing highs and that 75% line. If this slope is legit, kind of would be a nice area to nestle back towards support. So listen, this one's going to be really open, obviously, to headline risk coming out of the UK and any other developments that come out of it. So trade at your own risk, but we've been looking for signs of life from sterling, and I do hope that this is sort of the start of something else. Here's what it looks like on the daily chart. You know, we marked divergence into the lows into the start of August. You got that trigger break there, which looked completely fake because markets hadn't even broken the median line. So I was like, man, this thing's just done. Here's the spill to a new low. Again, a third divergent, well, not divergent in price, forget that. But the point being, it caught support at the former resistance trigger. Here's the rebound and push higher through the August highs. So if you just take a step back, okay, forget all the, forget the momentum indicators and anything, and just look at price action, it looks like it's made a pretty decent reversal off downtrend support. This break looks like a break of the median line of this formation. So, the post-Brexit low week close, where with that massive week closed, gets you as high as like 24.33. Guys, that's only like 100 pips from where we are now. So, ahead of that, we do have some targets. Going to be this basic swing low that you had from July. Here's what it looks like on the intraday. Again, but you get the picture, right? That's what these levels are. The weekly chart, just to put things in perspective again on the longer term, all right? We're already poised to have an outside weekly reversal off the lows, taking out essentially the entire August range and the August high. Like, if that's not bullish, I don't know what is. Now, having said that, the first test of resistance on a larger scale is going to be that same zone that we talked about since the beginning of the year, 2374 into 2433, that 50 pip zone of the low week close post Brexit for 2017 and 2016, right? Both years. Big zone. Caught the low early in the year, accelerated drop once we broke back in July. You even have the median line for this longer term trend. Let's pitchfork off the highs here. Just a lot of stuff. So it's exciting, something to keep in mind coming towards initial resistance. We want to watch out and find support ahead of that median line if this is going to work. Questions on sterling? Okay. Aussie, number 4. Another one that has been a sleeper cell for like days, weeks even. Here's Aussie on the weekly chart. So as it stands right now, again, we're poised to make an outside weekly reversal. We made an outside daily reversal, which first brought our attention to this trade. The first major region of resistance likened to the level we just covered in sterling. It's the 2016 low week close, but this one's also the 2016 swing low. Double whammy. It was a huge target we were talking about early in the year, right after the break of that yearly open. Took a while, but we did stab into it. That was the charge of the June rally. It was the accelerated move on the July drop. Here we are. Okay, this whole 30 pip region is pretty critical for me. So maybe a little bit higher, but if you're holding longs on Aussie, it's a good time to trim some of that as you get into this zone. If we close the week above 68.55, I'd feel a lot better for kind of more upside on this on the immediate front. But if we're gonna find some kickback, if there's gonna be pivots, this is the zone to watch for. Aussie on the daily chart looks like this. And here's what it looked like yesterday. Okay, that first zone of interest is right here. Now, aside from the 2016 swing low at 68.27, a basic 38.2 of the near-term decline, well, I guess this is not near-term, the daily chart, but the July decline, okay, a 38.2 of that zone comes in at 68.27, so even a little bit, or excuse me, 68.32, so maybe a little bit higher even, but you get the picture. Just so happens that coincides with these swing highs from August. And like I said, this thing is littered all the way into 68.56 with levels that could be significant. Last month's open being one of them, the swing low from June being another one of them. It's just there's a lot here. So look, it's been a beautiful rally. Again, the outside reversal off support on the daily standpoint was magnificent. You had ongoing divergence for a while. That's the exact pop you want to see. This is your first zone. Watch out. Watch out. All right, so the daily, the intraday chart looked like this. No, no major reliance on this red slope because it's only a 2-point touch, but it coincided with the downslope here, the 75% line. So I was weary that that might be something yesterday before the next leg. Here's what it looks like. Cracked right through it hours later. Didn't even give a pullback. So kind of wishing I was a little bit more, or I was in this to begin with. But here's the here's non-essential pullbacks are not negligible. Here's the break right through. The next major confluence on the intraday chart, the bottom of the range we just discussed, starts at 68.28. 68.34 would be 100 off the low. Slope support, slope resistance just higher. I know this slope has been broken on the downside and it was a mess. That turned out to be the 1786, just another extension of the same slope. I don't know if that's meaningful, but the point is the median line break, boom. Look for something in this zone, and it just so happens that slope coincides on the same zone we talked about on the daily chart, on the same zone that we talked about on the weekly chart. Clean moves coming to the first major sort of pivot resistance for Aussie. Any questions on Aussie dollar? One thing I would just note, and I was looking for this yesterday, kind of, you want to see some upslope, you want to see some gradients to work with, something to give you guidance on where to look for the pullback. I was looking at something like this. It looked too aggressive to me. But just to put a time value on things, if we do get the accelerated break, kind of gives you 69 as a target. For support near these highs, it kind of gives you 67.80 as like, watch that for support. Watch that for support. And it would choke up bullish, invalidation from the weekly open to that 67.45 target. So just to give you a picture of like what I would be looking for if we were to start to get some sort of pullback, that's a slope I don't have enough confidence on to really work off of just yet or operate off of, but it could give us some guidance if things turn. So I will leave that as is for now. All right, next, dollar CAD, number 5. Here's what dollar CAD looked like yesterday. So again, it all starts with the weekly chart. Even on this one, it's been a slow grind into resistance these last few weeks with all these drives into that just shy of the 33.55 level on all the accounts except for this week. Turn lower, but they all ended up being weeks that were positive as this thing continued to grind. Momentum couldn't even make it for a real kind of test of 60 even before turning over. Here's an outside weekly reversal off resistance, Fibonacci 618 level of the drop off the high from May, the 2019 high week close where we collapsed and closed that first week of trade for the year. Beautiful turn. Beautiful turn. So the weekly was a level that we were looking at. Here's the same zone that we've been watching since the August opening range, which was 133.45, the high, and again that's 618. We didn't, we didn't clear it throughout the whole month, so the August opening range essentially is still intact. Here's the start of this month. We made a probe and failed on the first, or on Monday rather. Yeah, I thought that was kind of the mark. Here was the second day. It ripped through again, but did the same exact thing. Same exact thing. And here's the reversal. So we just grazed the August open with that drop. That's what these dots are on this last move. So for me, I'm kind of like, again, where it could, if we're gonna bounce, if we're gonna see some sort of bounce, then rip lower, this is kind of where you'd look for it to play out. I like to move into 31.78. That's the August low, and if this slope is intact, or if it's legit slope, this is kind of a nice zone to look for heading into essentially the close of the week, like tomorrow. So look for that in dollar CAD. Again, the weekly open is going to be the broader bearish inval, but I wouldn't even want to see anything above the median line, like 32.70s, even lower at this point, is kind of the maximum I'd want to see this thing, get if we do bounce. Huge move, covering the entire August range, essentially. We just got to get through that 31.78 level on the downside. So that's dollar CAD. Let's see. Any questions on Loonie before we move off? Tomorrow's double whammy employment numbers, a quick update on that. We're supposed to get a print of 20,000. Look, CAD employment numbers is notorious for large swings. They're not like, well, first of all, the sample size is smaller in general, but in any event, last month we got a negative 24,000 print, right? So put that in context. The unemployment rate is supposed to hold 5.7, so we're not supposed to see anything really upset too much. And you know what? If it comes stronger, that's the Looney's opportunity to kind of rally even harder and break support. If we get through the August open, your first target's not too far off. It's 31.45. That's still a big zone to watch too. It's the 618, the entire rally off the low. Again, the opening range highs for June this time. So watch that as your first sort of level of interest if this does break lower. Questions on dollar CAD? All right. Dollar yen, the abomination. Here's what this looks like. So this one, kind of, here's what I want to say. I want to see 107.47, but I don't have a play for it. Even the break, I mean, I guess you had one opportunity to get in. Here's the issue. Here's dollar yen on the weekly chart. We were looking for this support bounce with great interest. And we talked about, the candle that we made last week off that level. It's the 2018 low, a nice objective zone for lateral support. You had a parallel off this high. This is kind of, getting a little creative here, but that was there. We were looking at basic slope resistance off the yearly high. This was the more compelling argument, which saw already 3 touches, 4 touches that converged in the same spot. Momentum, clear divergence as we're making fresher lows in price, no lows in the oscillator. So we started looking at dollar yen, I believe here. Yep. And here's the last weekly chart. So it then stalled for a while, and that's what kind of made me lose interest in it. And I feel like I kind of left and missed this move as well. Here's the break above 106.41, and the follow through played out pretty well. this week. Didn't last week. And this is kind of what bummed me out. We broke through this, that median line held, that slope held. I'm going to zoom out a little bit. And then it pulled back. So into the start of this week, when we started failing here, when we started failing here, when we started breaking lower, I kind of completely shifted my focus somewhere else. I thought we got to see at least 105.55, right? Maybe slope if this is even going to work. But it just reversed and ripped higher. So there wasn't much opportunity. Here's the move. The 106.41 again gave us a pop. But now we're failing ahead of the swing highs from August. So that's where I'm left kind of wishy-washy. I want to see 107.47, but it doesn't have kind of the breakout that you saw in the other dollar crosses. With the same respect, don't forget if there's risk off, the yen also catches a bid, so you don't really see that play clearly here. So I want to see 107.45. If you're in it, it's a slow grinder. I'd hold on to it. I wouldn't worry about it. Stop maybe below 106.42, but I don't really know how to get an opportunity to get back in this one. If it breaks down and gets back towards 106.42, by the way, that would make me even more shaded out of trying to press the long. I'd be more interested in watching 107.45, looking for a more prominent reaction there, maybe a decent fade condition. Again, if you're holding longs, I think you sit in this one for a little bit. Questions on dollar yen. All the fireworks all over the place, and this thing just grinds higher 40 pips. It's annoying. All right, dollar Swiss. Here is Swissy. And just to really quick, just to go back again, just to show you on the daily chart of also where we're turning. We had a lot of intraday spikes below that slope. The closes, I mean, for all intents and purposes, we're basically at the slope. Here's the consolidation. You don't even see this, okay, on the candlestick chart. But if you were to look at this as, a higher low, lower highs, this is also an objective breakout. And that breakout happened at the median line. So there is compelling evidence for a push and kind of rally higher. I just don't know how to get into it from here. I hate these kind of slow grinder higher. That's a 4-hour chart. I mean, give me a break. Okay, Swissy. And here's what dollar Swiss looked like earlier in the week. We had just made this turn, the 100% extension of the advance off the lows. So if it's just two equal legs off the low, 99.30 was an area of which converged on the median line into the start of the week. And I think the last time we updated this was right actually at the start of the week. There was the 100% extension, the convergence on that median line. Good spot to look. 99.30, 99.48, both major key levels of resistance. Well, 99.30 caught it. There was the reversal and breakdown. The level that we were looking at to validate a more significant high or a more significant reversal is underway was a break below 99.55 and yearly open objective stuff at 98.38. So we've now broken well below 98.38, and today's price action is testing 98.38 as resistance. Here's what it looks like on the intraday chart now. So I'm of the mindset that we pivot this for a while because every time we've approached it, that's exactly what's happened. We sit there as resistance, breakthrough, support, support. We break through, support, support. You know what I'm saying? It's not one of those low tolerance zones. The market's been sitting there and can spend some time here. So, if we pivot through, fine. If we get 98.55, fine. I do not want to see, kind of these highs taken out. So 98.77's max of an area of which you need to see exhaustion. And a basic 50, I'm not really stressing that. That's 97.95. This is kind of where I want to see a little bit more of a prominent reaction. I was looking for slope on this yesterday, but there's nothing. on the downside yet, in my opinion. Even if you were to look at something like this, it's basically about to be broken right now. Is that going to be a breakout? I don't think so. You know, it's pulling teeth on this one. So watch out. One thing I think I looked at yesterday wasn't very compelling, but let me just see today. Yeah, even that's a stretch right now. So look, either way, it highlights that same level. That's kind of, I do not want to see that high break. Downside target's 97.94, soft target 97.60s would be sort of the bigger zone to look for. Nice spot, nice spot. Again, an outside day reversal off the highs, confluence resistance. You had basic channel resistance for this upslope, just a parallel of this. And then this is the 618 of the drop, 618 parallel of that pitchfork. Was nice resistance, nice resistance, nice resistance. Also converged on that spot. Stretched the 100% right there. We just missed it. I think the high registered at what was it? 99.29, like 2 pips away before the outside move. Beautiful move. Beautiful move. We should be looking for resistance on this bounce. Questions on Swissy? It's number 7. Number 8. Let's hit SPX real quick, and then we'll go to gold, because gold better make a move soon. And we've been looking for. We'll go over gold in a moment. Here's SPX. Pete, here's what it looks like. Where do I start with this? This is what we looked like last week. This was published on the 29th. This consolidation was kind of something that we were watching for a couple of weeks. We kept on having to adjust the upper slope because the breaks were kind of fake outs. Even after this, it kind of popped through and then fell right through. I adjusted the slope again. But we introduced this pitchfork a while ago. And while, again, I don't know if this is the major pitchfork in play, it still looks like it's what I'm focused on this advance. So what ended up happening is, we did maintain support. We didn't even test 28.92, which was kind of like what we were worried about. Here's the move. Pulled right back 20. Well, we did test it, but rather we didn't break it. Held a support. There's the breach. I'm just going to bring it into focus on the intraday, same exact chart. Here's the 240. So this is the slope we were looking at back last week. It popped through, failed, and then eventually when we got the pop through that 75% line, here's the accelerated move. So we popped, dropped, we held 28.92, really nice, held the median line right here, really nice. And here's the breach and rip. So as I said to you earlier in the webinar, 29.78, 29.80, 182. That's a big zone for me. Is the August open? It's 100% extension off the low, so it's 2 equal legs. If this is corrective and everyone's getting faked out, this would be the spot. And then you have the upslope. Both upslopes, I might add. So, remember the longer term slope we've been watching with these lows. This is the March low, May high, August low. Again, it's just same reference point, right? Here's removing the near term slope. The median line goes right there as well. Add that slope that we've been following. Well, that's in there too. So that's my next big inflection point zone for SPX. If we get through that, you might be looking at a complete resumption or a larger rally, I'll say at least. If it probes through that level and were to fail, that I think would be an awesome short. First things first, though. Let's not get ahead of ourselves. If you're holding long positions, that's the zone that you want to start shaving things off of. You're looking to take anything on the counter side of this. The August open, again, that 100% extension. Nice spot. This retracement obviously goes null and void at this point. We'll keep the May high and kind of drop that. 2930 is always going to be still a major inflection we're going to watch. Sort of the main near-term targets I'd be looking at this point. And keeping in mind 3012, well, 3020 is the actual level. I'm not sure what 3012 is. Sorry about that. For the high day close. So keep that in mind if we breach there. Pete, does that help? That is SPX. He says, "Great, Mike. Hey, cheers, mate." All right, gold. Now it's not as clean to me right now. If you put a pistol to my head and say, "Boutros, I'm going to blow your head off. What's the trade?" I'd still say look lower near term to get long, but it's just it's a breakout. We've loved the long side of gold. We still do. It's just that at this juncture, like, man, it's stretched. We talked about so many different things to keep in mind. The ongoing divergence we've been making essentially since the start of the year on the daily chart. Weekly chart has momentum at the highest levels that we've seen since the record highs in 2011. That's the last time momentum was anywhere near this. So like, well, how long can it last? Well, the old adage is true that markets can stay irrational way longer than you can stay liquid. So I'm not going to try to fight this, but I just want to note that after all this, not all this rally and all the noise that we've seen in price just in the last 2 weeks, guys, we still haven't made one single weekly close above what? Our last target for the year that we noted at our yearly forecast, the major critical level at 1526. 1522. It's the same zone. It's the same. We still haven't closed a weekly close above it. So, I don't really want to trust this again because the next upside target, which was 1557, 1558, we made a high at 1556.88. Excuse me. Like, come on, give us some sort of pullback here so we can get back in. There might be a trade on the short side, which is what I've been looking for, but man, it's just continued to push. So look, um, it's a very clear range in my mind what I need to see break now. I've tried to kind of give this color and give this slope. Nothing's been really fruitful. I'm going to drop both of these. A basic 618 of that near term August rally still gives you 1516. That's the break to give us the correction. 1558 still the breach to get us resumption. 1558 is the next top side target. That's a big zone. The fact that it comes out here into the mid-September month is why I thought there was time here to kind of get some sort of play on the downside and then the ultimate rebound higher. Look, it still might work. I do want to see 1516 clip or at least another test of that lower parallel. Ultimately, a 1558 rip puts you right on target for that long-term 618 of the entire, again, record drop from the record highs. The 618 is 1558. So I still think we get that. Eman says, "I'm short gold at 1555. As always, Michael, I appreciate your near-term outlook. I don't want to sit in this trade too long." So I kind of gave you my outlook before I read your question there, Eman. I like the short. I want to see a test of that lower parallel. Whether you get into 1516, kind of splitting hairs, that's Friday's low, comes in just ahead of that. And don't forget the critical level that we've been watching for months is still ahead of that. So is it worth it to sit in it through this to try to get the extended drop to 1516? Depends what momentum looks like as we get there. But just my humble opinion, man. I like it. I like it. I mean, your entry on that, you kind of nailed it. So I wouldn't really be too concerned. I'd put a break even stop, if not, at this last swing high, just ahead of that, like 1550. But ultimately, watch for reaction at that slope. I don't know how I feel about this gradient. I mean, the upper parallel looked decent at first. Here was also decent, I thought, but then we haven't really gotten much median line action. So you have to really watch this one close on the entire decline because every sort of pullback that looks like it's about to gain steam just completely fails. So I don't want to get caught on this one. Also, one other thing before I move off, the daily chart, Eman, is quite clear here as far as the momentum trigger that's been in play since April. One touch, two touch, three touch, four touch. We need to close below that slope, ideally with a break below 1522, which, by the way, also is the monthly open. I mean, this thing just can't get cleaner. It can't get any cleaner than this. 1522 is also the monthly open. It's also the weekly open. It's also the major low that we made in late 2011. The yearly low for 2012 at the top side of that range. Such a critical zone. Now also the monthly open. So what I wanted to do is take a 120 minute here and see if there's any structure to this decline. There's just like nothing to work with yet. There's no back and forth. It's just kind of bounce off resistance and then a new high. Let's take it even deeper. Yeah, there's nothing here, I think. So again, for just an example, Eman, of how you could, kind of structure that trade. Uh, if you look at that slope that I just added, again, we don't have any merits that this is in play yet. You did see one bounce, two bounce, three bounce. You saw an accelerated break. If we hold resistance, like right here at 1540 now, kind of push lower, that median line again comes in at, you called it, 1522, 1526 again, which is also the weekly open, which is also the September open. It would choke up this 618 to right here into early next week. I mean, this could be a drifter. If anything, drifter a little bit sideways to lower. Ultimately, we're looking for a larger like test of major uptrend support to get us that stretch near 1558, I think. Eman, does that help? What I wanted to highlight is 1550, right? So lock in like $5 profit. You can see that's the swing high that we made last week, right? It would be also the upper parallel if this slope has any merits, which we do not know. But also, that median line, which kind of got a little messy, right? Resistance, resistance, looked like a decent pivot. That also converges there. So there's something to look at here. And your entry spot, I mean, you nailed the entry. So I kind of feel like you wanna be a little. I know you don't want to sit in it for long, and that you're talking to a guy who hates sitting in anything for long. But I think on this one, that 1558 miss was something good. Just my opinion. Eman says to the maximum. Thank you a lot. You're more than welcome, Eman. Nice entry. Nice entry. All right, well, that's all I have. Any other questions or trade setups? Feel free to throw them on the message board now. If not, one other thing, guys, the silver rally, man, that thing was ridiculous too. Look, the intraday charts look messy as heck. I don't even know where to start there. Here's the daily chart. I just wanted to highlight that even these random lateral levels, I can't even remember where this one came from, have just been, look at that. I didn't update anything since the breakout above the August low, above that 618. So it came into 1921, it kind of sat there for a day, broke higher. It closed at 1954. Here's the pullback. This thing is way overstretched as well. The breakout, a little bit more magnitude here, a breach of uptrend resistance, typically the sharpest part of the move, as we often do note. Don't mess with this one. I just don't think the near-term picture is kind of. I already hear people calling, head and shoulders here on the internet. Maybe, but use prudence on this one because it was just radical. Does look like a nice completion of a fifth wave, but um, we'll have to reassess this one. I don't even want to mess with that. All right, guys. So that wraps it up for the week here on the intraday charts, on the intraday webinars. I'll see you on Monday again for the free session on daily effects, and then we'll be right on here on Tuesdays and Thursdays as usual. Watch non-farm payrolls, CAT employment numbers tomorrow morning, both hitting the tape at 8:30. Again, no major deviations expected. Both supposed to hold unemployment at 3.7 and 5.7 dollar and CAD respectively. Have a great weekend, and I will see you next week. Cheers.